School was his grandmother.
Really?
Look at this, he's like 9 years old. Look at him. He's fantastic. Kidding around.
These guys are kooks.
Lady from Pasadena. So what's interesting about what Chris is talking about, he's getting also into fund structure. And as a former hedge fund guy, the question ultimately comes down to liquidity and what is a lockup. And we're talking about assets that at times have no liquidity. And so our fund managers locking people up, Brian. I mean, what's the story here?
Listen, liquidity's gotten a lot better.
The hedge fund world's changed so much.
And yeah, I mean, it's changed a lot. I mean, what I do every day is I monitor what our positions are, how much liquidity is there, and I will cap the fund size depending on what the market's doing. Liquidity has improved a lot over the last 6 months, but to your point, there are, if you get too big of a position in an illiquid coin, it can be an issue. I mean, Chris's point about, let's say 0.5%, 1 to 5% allocated to this asset class, I think is appropriate. It's highly risky. It's similar to liquid venture capital, so you have to understand the risks. But it's also an emerging asset class, so there's a lot of return possibility.
I'll ask you the same question. Do you have a grandma in your ETF?
Do I have a grandma? I'm sure we have grandmas in the ETF.
No, but I mean, like in your own family. I'm just curious.
Well, we have family for sure.
Yeah.
Yes, in fact, we do have a grandma.
Okay.
My mother's a grandmother.
I thought it'd be fair and ask the same question.
Here's to the crazy.
Man, they are such kooks. But anyways, he makes a great point where you're going to want to invest at least a little bit into this asset class, and you do have to be careful. So the point that he did make is you got to be careful about illiquid coins. But if you've been following my channel, I've constantly been preaching about staying away from, especially for crypto newbies. Like I said, I mean, once you've been investing for over a year and you've been following the market for over a year, I would say you're not as much of a newbie considering how new cryptocurrencies are. But for your first year of trading or buying and investing, and by the way, don't day trade, and basically watching the market, I highly recommend just staying with coins that have over $1 billion market cap. You're not going to deal with these liquidity issues, and you don't have to worry about crazy volatility that some of these smaller coins will have. So that's the easiest way to avoid some risks in crypto. But the easiest way to try to downsize your risk is put in small percents of your portfolio and just educate yourself. So if you were going in with the mindset that I want to invest $1,000 in Bitcoin, that's great, but force yourself to only invest $100 a month and slowly put in that money and figure out, what coins and what investments have been doing well for you, what haven't been doing well for you. And like I said in the beginning, you're always going to make some sort of mistakes, but it's a lot easier to learn once you're putting money in and you lose some of that money and feel that pain. I've mentioned a gazillion times that I had to pay 120 grand for my graduate education. I did an MBA at the University of Southern California. So any money I invest in crypto, if I lose, it's still a better deal in my opinion. So yeah, let me know what you guys think about this, but I do feel like it's very important to look at coins in a different light when you first come in, and then obviously you can make adjustments as you become more educated. But let me know your thoughts about this, and I will talk to you guys soon.